Welcome to TradeTheMBI.com. This is John. This report is for the 14th of August. Well, we've got pretty decent support right there at that 76%. The ABM green all held up from a daily standpoint. We're seeing a little bounce off that, though we do have negative shakeout. What we've seen, though, is the closing of the mouth here with the tongue getting cut off here, so to speak, by the orange. So the real question is going to be when these two meet and whether there's a rejection going back, because you still don't have any green turnaround in any way, shape, or form. So this is just short-term buyers keeping this float still below the ABM red line. So the potential is if there's a slight break, we're certainly going to be hitting back below 28, probably very quickly if that happens. So it's a crucial support point. Almost identical situation here in the NASDAQ, though the shakeout's a little bit stronger, but you're seeing that same closing, same meeting point right there. Slightly better on the extreme histogram from a sell standpoint. So the reality is that it really comes down to the basic numbers. In this case, you've got the ABM yellow for the NASDAQ, which is slightly higher, which actually aids in a conversion flip kind of situation. Now that we have the euro underneath the little blue line here, which was the top side of the range that had been established way back, and this becomes a flex point for the market as well, because as long as it was above that, you had a little bit of an artificial support for S&P earnings, and definitely a float factor. But with the rumblings of Italy and some of the other EU countries, a little bit of fear has moved into that, particularly with the Turkey situation and the fear that there's a broader contagion potential with some of this cat and mouse game. And then you had Italy threaten to blow up the EU if they didn't continue to buy equal shares of Italian bonds. So this is getting into the whole restriction. Who has the power within the EU? This is basically an attack on Germany and its control aspects. So that's a separate issue, but it plays into what happens for currency convergence, and it impacts EU earnings without question. The fact that you have robust growth in the U.S., though, certainly modifies some of those concerns, and that really becomes the biggest key in following U.S. growth rates and whether it's sustainable or it's going to increase, because that justifies higher multiples. And of course, still plenty of people have decided to flee to treasuries, to the safety aspect of it, particularly in the summertime. However, again, I've pointed out to this before, as we get into September, October, that is going to present a yield problem for those who have to match S&P earnings. They will be behind, so there's going to be a need for some kind of pullback to justify having gotten out a while ago in May, so to speak, and that will have an impact later on. And of course, as I've said, oil, the new trade compared to gold, and has been for, well, the last several months, going well even back into April, and that we saw that conversion, which has caused gold to be a lot weaker than many would have expected. Plus, you're not seeing that, and we've talked about this, that labor participation pushing wages up. It hasn't really transmitted itself into inflation, and that certainly has not given any impetus to gold whatsoever to rally in any way, shape, or form. So we'll certainly be on it, though, when it comes time for equating that to a buy side. I really need that DOC to be that large. Though it is kind of pertinent to what we're going to discuss with what we see on this 5K chart from an intraday standpoint. Certainly we had that nice decay coming down, red candles, and then we talked about this. We revisited the low portion of it that was necessary for the dip below the red line on rising shakeout and also much improved DOC readings. That led to a gold candle here above the 50% line, and it was kind of questionable, because you had this positive extreme that popped up over the 50, and it could have been a potential for wanting to think that this had topped out, but once the gold above 50 came, on rising shakeout, perfect view to see that go to the top. We didn't get a large cluster. What we ended up with was the first beginnings of what I look for here, which was the orange moving above, steel moving lower, and green preparing to cross below. So this was like a precursor warning until it finally really took a strong move, where you had steel drop Orange rise above 13.5 at the same time. Cyan moved above green, which was like a precursor towards what we expect to be a DOC spread at that point. So it's just a matter of getting in just above that ABM, but leaving a small range on a move that would take you back to the top. So it's not that big a risk in that consideration. And then look at what it did. It produced a beautiful rundown. Even when we get to the 50% mark, there wasn't anything that was indicating a buy until you get down here towards the 23%. Posed a little bit of an interesting issue, that automatic flashback, but unfortunately that took place right at a white candle. And so new lows came in, and then beautiful gold below the 23% at the zero, no less. And those usually get a nice little spark buy, but as soon as it does, you start to look for opportunities. In this case, you got a positive extreme, which meant that the low below the 23 was going to be retested, and it was good likelihood that you would get somewhere around 80% of that range in between the 23 and 100%, which would be even lower than that point. And that's exactly what happened. You ended up with a nice DOC spread, the opening of the broader mouth. You had it a little earlier, right here, where it dipped below, but then what I looked for in this particular case, because you had the green and the cyan meeting, that separation. Cyan moved higher, green moved lower, orange rising, steel falling. That was the target ticket point right there. Looking for at least the positive extreme, and like I said, the ultimate target, 80% of that. Knowing that that was going to hit anyway, you knew that that white candle would get filled, and it did in the case. And I'm thinking of turning the white candles into orange color, since we really don't have that, and that would separate it from what will be the MBI buy signals at the bottoms and that, so that becomes key. And then in this marquee rise coming off that, which was decent with the rising extremes as well as the DOC improvement, and once you got above the 50%, we ended up with gold right near the 100%, and so going to there. But we get these nice positive extreme retraces from the DOC rising, so we can look for this low to come in there, and that's below that 2830 range would be a downside target for that. And in fact, there's still a few points beyond that at this particular level. Actually, we should change the color of these. I had minor TS collapse that caused me all sorts of grief that I had to reload. That's why I'm a little late getting this out, but got it all back and going. And so that leaves us with where we're at right here before market open, and we're filling that back in. So I'd be looking for that 50% retrace around 29ish to see where we end up, and if shakeout's prepared to move negative in that. Otherwise, I would expect that to bounce and hit back up to the highs in an attempt to recapture that intraday action. So we're still, again, we're getting beautiful action, reasonable point movement. We're in the 20s for that range right here that you can see for the Morganacci right there. It's dwindled to 19, but it's still very nice. So no objections to any of this. I think we just keep playing with what the readings give us, and these are beautiful swings intraday, while still in a generally okay market, even though the readings have been generally pretty weak overall. So not surprised, not afraid to take shorts as well as longs in this case. So we're pretty much evenly biased as far as that goes. Obviously on the daily, you break those critical support lines and things begin to change for you, but for now, just follow the signals. As always, though, trade well, and I'll keep putting up charts on Skype chat.